Is the market overvalued, and are we going to see a crash? And the answer to that first question is resounding yes. We are very overvalued right now. And the answer to the second question is who knows? No one knows if the market's going to crash tomorrow, today, a year from now, 10 years from now. But the best thing that we can do is put ourselves in a position to where we minimize our downside and maximize our upside. I'm going to show you some pretty interesting charts as to why the market is obviously very overvalued right now. It doesn't matter, how good the economy is, what Trump is doing in these tax cuts. It really doesn't matter. The market is overvalued. So in this first chart, it shows the amount of leverage in relation to the economy. So if you don't know what leverage is, it's basically when you have a brokerage account, you can actually borrow money from these brokerage houses like TD, Schwab, and Fidelity. So say you put in $50,000, you can get a margin account and borrow basically up to 2 times your money. So if you have $50,000 in an account, you could borrow up to $100,000. The next chart that I want to show you guys is market cap to GDP. And that is also, back up to 2001 levels. 2008 is actually wasn't that high back in 2008, but we're at 137%, which is pretty much right what we were at in 2001. And then also another chart is the price to sales ratio, and we're also back to 2001 levels. And this last chart is a chart that shows basically a combination of all 4 of those. And it basically shows that we're 122% above the mean. Back in 2001, we were 155% above the mean. So, pretty close to those levels again. And then another chart that I want to show you is a Case-Shiller index, and this shows basically a home price index. And this is also back to 2008 levels. Back in 2001, it actually wasn't that high. But in 2018, we're back above 200, which is considered very elevated. So yeah, all those charts, it's quite obvious that, we are pretty overvalued right now, but that doesn't necessarily mean that we're, in for a crash. Markets can, stay elevated for years before they come down. And it can, even go up further. We've had low interest rates for the past almost decade, and that's what's fueled this, just massive bubble. But even with all those very convincing charts, that shows that we are obviously, overvalued. I don't think we're going to have a recession anytime soon, or a crash really for that matter. And that's for one simple reason, and that's the yield curve. So if you don't know what the yield curve is, it's basically, how much interest government bonds will pay for anywhere from 1 year to 10 year. So obviously a normal yield curve, you would see upward sloping. So for a 1 year bond, you would get the lowest interest rate, and then from there to 10 years, you would receive more and more interest on your return as you get further out to the 10 year. Obviously, because if you invest for a longer time frame, you're going to want to get more in return for your investment. So the reason why I don't think that we're going to have another recession anytime soon is because the yield curve is still upward sloping. And for every single recession that we've ever had in the past, the yield curve has been flat or inverted. And that's forecasted every single recession. So there's never been a time when we've had a recession when the yield curve is upward sloping. So we're obviously not in store for a recession, but that doesn't mean that we can see a stock market decline back in 1987. That wasn't a recession, but the stock market fell, I think, 25% in one day. So I don't necessarily see the stock market crashing 25% in one day, but I do think it can come down further from here. Obviously we've seen a peak of about 26.5 in the Dow, and it's come all the way down to I think around 23,000. Now it's back to I think around 24.5. We've seen the stock market go up so much in the last 1 to 2 years. I think we could be in store for another pullback of more than 10%. And I think that'd be quite healthy for the market and provide a great buying opportunity. So if we do get something like that, I would definitely be a buyer at those levels. But all the charts that I showed beforehand with the Case-Shiller price to sales, it's quite obvious that we are overvalued in this market. But the most meaningful chart of them all, the yield curve, it's still inverted. So that's the most important chart of them all, and it's forecasted every single recession in the past 2 centuries. So to answer my question that I asked earlier, yes, we are overvalued, but we're not in store for another recession for at least in the foreseeable future. Eventually, we are going to see a recession. It's just, that's part of life. That's how the economy works. It goes in cycles. I just wanted to kind of go over why I thought that we could see another pullback here. Going forward, I do see any kind of pullback or correction as a buying opportunity, just because the underlying economy is so strong. So that's it for this video, guys. I just kind of want to go over some of the charts that I had discovered. It's pretty interesting what you can see with those charts. I'll link some of the charts down below. So that's it for this video, guys, and thanks for watching.